Hey guys, in this video, we're going to be talking about the longest paying dividend company in United States history. So this is a really interesting company, one that I haven't even heard about since a couple days ago. I bet you haven't heard about it either, so excited to get into it. Before that, if you like this type of content, please hit the subscribe button, give me a thumbs up on this video, let me know your thoughts in the comments if you have heard of this stock, if you have thoughts on this stock, if you have other extremely long paying dividend stocks that you like or that you own. Would love to hear from you. So this company is, as this title implies, a very little known company, small cap company, which is surprising when you think of a company that's increased their dividend for over 25 years but have paid a dividend for over 200 years. You'd think it would be this massive company with such a large moat and diversified business model in different areas of the world. No, this is a very localized company in one specific category, and that's why it's amazing that they've had such success and such longevity. But we're going to get through that a bit in this article and this video today. We're going to talk about what the company is. We're going to go through their annual report, some interesting stuff in there, and then we're going to finalize this video by just looking at their stock chart. I'll give some thoughts overall on the company and just my thoughts on the stock, but this is more just a fun video with a under the radar stock that has a really interesting pedigree of being the longest paying US dividend stock on the market. So the stock that we're talking about today is the York Water Company. You can see it trades on the NASDAQ for $45 a share. Its market cap is only $640 million and its dividend is 1.8%. It's paid a dividend every year since the year 1816. So that is 207 straight years, and they've been increasing the dividend for what seems like a short amount of time, but is only 26 years in a row. So this really has turned into a dividend growth stock, albeit at a low yield, and excited to get into some of the nuances here today. It's funny because lots of people talk about stocks that have been paying a dividend for over 100 years. What about over 200 years? This article is a bit old, 5 years ago, but in the grand scheme of things, that seems like nothing given this company and how long that they've been paying a dividend. So they are in the water utility space. They purify water. They deliver water to homes. When water gets dirty, they manage the waste in an efficient and sustainable way, stuff like that. So it makes sense if there is going to be a small company in this space that they are in a category in a segment like this that's naturally and inherently has quite the large moat. And in addition to that, kind of plays in a space with not a lot of competition, and they're just serving a particular market where it doesn't make sense for anyone to come in and enter. So just reading some of this, you can kind of see now that they've started increasing the dividend, it's actually turned into a nice compounding dividend, albeit a low starting yield, currently just south of 2%, but they've been increasing the dividend since the early 2000s. And then from a total return perspective, you can see even over the last 20-25 years, it's outpaced the S&P 500, 10xing versus 6.5xing. And even on the 3 year, it's holding in pretty well there as well. And this is a bit misleading because this is a 3 year ending. I think this article is 2017. So we'll look at the stock chart later. But before that, I just wanted to share a bit more about the company. This company, just reading off their website, is committed to providing customers with safe, dependable, high-quality water, wastewater, and related services that meet or exceed expectations at reasonable rates. So if you look at what they actually do here, the business of the York Water Company is to impound, purify, and distribute water, as well as collect, convey, and treat water waste to preserve local water quality. And I believe they are operating exclusively or primarily in Pennsylvania by their presentations. What I found really interesting about their presentation is you can kind of see through their presentation how much they respect history, and it's just ingrained in their culture. They start their annual report just showing in the same boardroom 100 years ago, their board of directors, and then 30 years later, 50 years later, in the same exact room, they said that they took ownership of either the building or the lease when it was built in 1929, and they've been holding their general meetings there for almost 100 years now. Just a lot of history and a lot of ritual ingrained in this company, which is really interesting to see. They always talk about throughout the presentation taking time to reflect upon who came before us and how they grew their business, and just where they're going from here. So really interesting, really unique company. Love to see that from a company that kind of has that title of the largest or the longest paying dividend in U.S. history. Their business, you can see what I find interesting is instead of doing quarter over quarter or year over year, maybe they're cherry picking data, but they're looking a lot longer term, going 2017 to 2021, showing over the last 4 years how their net income's grown, how their investment in their business has grown, how their earnings per share has grown over the medium term instead of being so short term focused. So I think um, they're really playing on the fact that they are this historical company that is known for their dividend payment, a small cap in the grand scheme of things. So probably having some fun with it too. But I just find it really interesting. You can kind of see they continue to invest in additional like water pumping and wastewater plant facilities across their network. I saw they just did a small tuck-in acquisition. The acquisition was like 2,000, serving 2,000 new homes in an area. So you can kind of get a sense for the size of their operation overall. Look, they're bragging about adding 1,800 new customers. So very small business, but very reliable business. And you're not going to stay in business for 200 years and continue to deliver superior shareholder value if you're not doing something right. So they definitely are doing well, even though they probably move slow and looking very long term on the business. It's just really refreshing to see a company like this. Looking at their stock price, I just thought it was fitting to start with the broader view. So over the last 25 years, the stock's gone from $6 to 45. So shareholders who've kind of invested in their story, gone along for the ride, has done really well. The other thing with these companies is like, do you value a company higher because they have this kind of history? I'd say generally no, but I don't think it hurts that they clearly have a culture, they clearly have a business model in place that is protecting shareholder capital over long periods of time, continues to prioritize shareholder via the dividend in terms of doing distributions through everything. Think about everything that's happened in the world over the last 200 years. Recessions, world wars, diseases, everything else. And they've paid a dividend every year despite all of that. So I think it definitely doesn't hurt from an investment thesis to have a company with this kind of history, this kind of culture ingrained in it, and the drive to continue extending that streak every year. And now that they're increasing the dividend, you can kind of bet that they have the same kind of tenacity to deliver that streak and grow that streak into a 100-year, 200-year dividend growth streak in addition to their current 200-year dividend payment streak. Looking a bit shorter term, over the last 5 years, the stock's up 50%, so still doing well shorter term. It's been flat since the beginning of the pandemic, down about 7%. So obviously I don't know the details on this company, but I thought that was worth noting, worth calling out. Past 1 year, the company's been flat, which is pretty good performance given the overall markets have actually been down over that time period. So you saw it in that report. Last year, this company made about $1.30 in EPS. So the company is trading at a low 30s multiple. This is probably accurate, around 32 times. It does operate in a very defensive market. It does have the 200-year dividend payment streak, so you can sleep well at night. With that being said, despite playing in a category with a very high moat and probably no local competition, I'm not interested in paying over 30 times for a company like this that I don't really think has a really strong growth horizon. If it was just like a stable utility-like stock, I'd probably be, or I think it would be a more attractive value closer to 20 times earnings. So I do think the company seems expensive where it is today. Not sure how much their streak is paying, is juicing their value, let's call it. But I just think at a PE of 32. It's just too high for these types of companies, and I can go get a very nice utility company trading for high teens if I wanted it. So that's my overall thoughts on the company, but I hope you may have learned something new in this video about the York Water Company. If you're a dividend investor, you're just a fan of dividends, just to kind of have that little bit of almost trivia knowledge in terms of the longest paying company to be paying a dividend. I think Stanley Black & Decker is the second longest company to be paying a dividend, closer to 140 years or whatnot. So the York Water Company has the lead by quite a margin. This was just a fun video today. I hope you guys enjoyed it. And if you like this type of content, please subscribe to the channel. If you appreciated this content, drop a like on the video, and I'll see you guys in the next one.